Today, we're looking at Pfizer stock.
Interesting one.
We've got a ton of sources, financial reports, company info, historical data, all that good stuff.
Sounds comprehensive.
So by the end of this, you'll know if Pfizer is a yay or nay for your portfolio.
Yeah, gotta make those informed decisions, right?
Big time. So to kick things off, how about a little history lesson?
Yeah.
Pfizer's been around forever.
Right. It all started back in 1849 in New York City.
New York City, huh?
Yeah, two German entrepreneurs, Charles Pfizer and Charles Erhardt.
Interesting.
They really grew the company through, well, a lot of acquisitions.
Like gobbling up other companies?
Exactly. Two big ones were Warner Lambert in 2000 and then Wyeth in 2009.
Those are some pretty major moves.
Those really put them on the map. I mean, they're the biggest pharmaceutical company in the world now.
World's biggest, wow. And that size definitely gives them some serious market power, right? Like, their products are household names.
For sure. You've got the Pfizer-BioNTech COVID-19 vaccine. Everyone knows that one.
Of course.
And then there's Prevnar 13.
Prevnar 13. Remind me what that one is again.
It's a pneumococcal conjugate vaccine. Actually came from that Wyeth acquisition we talked about.
Right.
Those two products are huge contributors to their market share.
Makes sense. Okay, so they've got this massive market presence,
Mm-hmm.
but they're not just sitting still, right? They've been making some big acquisitions lately.
Oh, yeah, definitely active. In 2023, they bought Seagen.
Seagen, okay.
They focus on oncology. Big price tag, $43 billion.
Whoa.
Then just this year, they sold off their part of Haleon,
And Haleon's it.
the company behind Sensodyne, and other consumer health brands.
Okay, so they're buying and selling, shaking things up.
It's all strategic, right? They're refining their portfolio.
So all this activity, what does it mean for their financials? What's the current state of Pfizer?
Well, they currently have a Zacks rank 3.
Zacks rank 3. What does that tell us?
Basically, analysts are predicting returns that are pretty much in line with the overall market.
So not necessarily blowing the market away.
Not at this point, no. But, there's always more to the story than one number.
Right. Got to dig deeper.
Yeah.
What else are the analysts saying?
It's kind of a mixed bag. Some are worried about cash flow growth, momentum, and projected sales.
Not the most encouraging signs.
But on the other hand, they have a value score of A from Zacks.
Value score of A, so is that a good thing?
That actually suggests they might be undervalued.
Undervalued, that could be an opportunity.
Could be, especially for value investors. You always got to consider their overall financial picture, though.
Makes sense. So how do we assess that? What are the key things to look at?
There are some important ratios we want to analyze. EBITDA, price cash flow, and price book. Those can give us a clearer picture of their worth.
Okay, so we're going to get into the nitty-gritty of those later on. But first, let's talk about innovation. Everything went pharma, right?
Absolutely. You need that pipeline of new drugs to stay ahead.
Exactly. So how's Pfizer's pipeline looking?
They've got a pretty robust one with new meds and vaccines in development across a bunch of different therapeutic areas. But they did make a controversial decision back in 2018.
What was that?
They stopped research into Alzheimer's and Parkinson's treatments.
Wow, big decision.
Yeah, definitely a tough one. It probably came down to business, though.
Okay, tough, but necessary.
Yeah.
Now let's shift gears to dividends. A lot of investors are looking for those steady payouts.
For sure. And Pfizer, they've got a solid history of paying dividends.
So they're reliable in that sense.
But their current dividend yield is a bit lower than the average for the S&P 500.
So maybe not the highest returns in the market.
Yeah, there could be other options out there with higher yields.
Okay, good to know. What about share buybacks? Have they been doing any of those lately?
Actually, the info we have doesn't mention any active share buyback programs.
Okay, interesting. Buybacks can be a good way to return value to shareholders.
They can, for sure. It's always worth looking into whether a company has done them in the past and how it affected things.
Definitely. Okay, let's talk ESG, environmental, social, and governance factors.
Right. Those are getting more and more important these days.
Absolutely. So how does Pfizer stack up on the ESG front?
It's a bit of a mixed bag. The good news is they're investing in projects to cut down on greenhouse gas emissions.
So they're making an effort there.
They are, which is positive. But they've also had some legal issues and scrutiny related to environmental pollution.
So it's not all perfect.
Not quite.
Okay, so we've covered a lot of ground here, from their history to their financials, their market position, and even ESG factors.
Yeah, we've laid out a good foundation.
Now let's dive into the pros and cons of actually owning Pfizer stock. What are the main takeaways for potential investors?
All right, so on the plus side, there's that potential for undervaluation that we talked about.
Right, could be a bargain.
And then their market share is incredibly strong thanks to those big products like the COVID vaccine and Prevnar 13.
They're definitely major players.
They've also got a diverse portfolio, products in a lot of different therapeutic areas that add some stability.
Diversification is always good.
And then there's the dividends. Like we said, the yield might be lower, but they're consistent.
Those are some pretty solid positives.
Yeah.
But of course, there are always two sides to every coin.
Right. So on the downside, there's the potential decline in cash flow growth. That's a concern.
Yeah, got to watch that closely.
And then there are those legal and ethical challenges.
Definitely something to keep in mind.
And, they seem to rely a lot on acquisitions for growth. While that can work, organic growth that comes from within is generally seen as more sustainable in the long run.
Right, you want to see innovation coming from inside the company.
Exactly.
Okay, so it seems like there's a lot to weigh when considering Pfizer. They've got their strengths and weaknesses.
Definitely a company with a lot going on.
In part 2, we'll dig even deeper into some of the financial ratios, strategic moves, and all those crucial aspects that'll help you make a more informed decision.
Sounds good. Let's get into it. Okay, so let's unpack those valuation ratios we touched upon earlier.
Yes, let's get into those numbers, see what they're telling us. You mentioned EBITDA. Can you break that down for us? What does it actually mean?
Sure. So EBITDA, that's enterprise value to earnings before interest, taxes, depreciation, and amortization. It's a mouthful.
It is, but it's an important one.
Yeah. Basically, it helps us figure out how much it would cost to buy the entire company, taking into account its debt compared to its core earnings.
So it gives a more realistic picture than just looking at the stock price, right?
Exactly, especially when you're comparing companies with different debt levels and tax situations.
Gotcha. So in general, a lower EBITDA is better.
Generally, yes. It could suggest the company is more attractively valued.
Okay, makes sense. Now, what about that price cash flow ratio, the PCF? What's that all about?
So price cash flow, that's all about how much cash the company is actually generating.
Which is ultimately what matters, right?
Right. It's the lifeblood of any business.
Exactly.
So this ratio compares the company's market cap to its operating cash flow. And again, a lower PCF compared to others in the industry and its own history can be a sign of undervaluation.
So we're looking for those red flags, those signals that something might be off.
Exactly. We want to see how Pfizer stacks up.
Okay. And then the last one you mentioned, price book, the PB ratio. Remind me what that tells us again.
Price book compares the market value of the company to its book value, which is basically the value of its assets minus its liabilities, what's left over.
So it's like what the company is really worth on paper.
Kind of, yeah. A PB ratio below 1 could mean the market is valuing the company at less than its assets are worth.
Interesting. So that could be a screaming buy signal.
Maybe, but you have to be careful with this one.
How so?
Well, the nature of the assets matters a lot.
Okay, I see. So for example, a pharmaceutical company with a really strong pipeline full of promising new drugs, they might be valued higher than their book value, even if the PB ratio is above 1.
Precisely. Their future potential is baked into the stock price.
Right, makes sense. So we can't just blindly rely on these ratios. Got to look at the bigger picture.
Always, context is key.
Absolutely. Okay, let's shift gears a bit and go back to those acquisitions we talked about. The Seagen deal, that was a big one. $43 billion. That's a serious chunk of change. What's the thinking behind that? Why did Pfizer go all in on Seagen?
Well, it shows they're really betting on the future of cancer treatments, specifically targeted therapies.
Targeted therapies, okay.
Yeah. Seagen, they specialize in these things called antibody-drug conjugates. Basically, they deliver powerful drugs directly to the cancer cells, which means less damage to healthy tissue.
Sounds pretty cutting edge.
It is, and the oncology market is booming. I mean, it's expected to be worth over $400 billion globally by 2027.
Wow, those are some serious numbers. So it seems like Pfizer is trying to position itself to capitalize on that growth.
Absolutely. It's a strategic move to be a leader in that space.
Okay, and then there's the Haleon divestiture. They sold off their stake in that consumer healthcare company. Seems like a move in the opposite direction. What drove that decision?
It's all about focus.
Focus, okay.
Pfizer wants to be a pure-play biopharmaceutical company.
Really?
They want to concentrate on developing innovative medicines and vaccines, the stuff that's really pushing boundaries.
I get it.
Consumer healthcare products, things like Sensodyne or Advil, they're important, but the growth potential just isn't the same.
So they're streamlining, shedding what doesn't fit their core strategy.
Exactly. It's about maximizing their resources, putting them where they'll have the biggest impact.
Makes sense. Okay, let's take a step back for a moment and look at Pfizer's track record.
Yeah.
How have they been performing in recent years?
It's been a bit of a mixed bag.
Mixed bag, how so?
They obviously benefited hugely from the COVID-19 vaccine. That was a massive revenue driver.
For sure, that was a game changer for them.
But they've also been facing some headwinds with declining sales of some of their older blockbuster drugs.
Ah, so the patent cliff, the competition catching up.
Right, it's a constant battle in this industry. To combat that, they've been cutting costs and making those strategic acquisitions we talked about.
So trying to stay agile, adapting to the changing landscape.
Exactly. The pharmaceutical industry is constantly evolving. You got to stay ahead of the curve.
Absolutely. So looking ahead, what are the key factors that could impact Pfizer performance in the coming years? What should investors be paying attention to?
Well, a big one is new product launches.
New drugs, new breakthroughs.
Yep, they need those to offset the declining revenue from those older drugs.
Right, got to keep innovating.
Another big factor is the regulatory environment. This industry is heavily regulated, and any changes there can have a huge impact on profits.
So keeping an eye on Washington, what's happening with healthcare policy.
Exactly. And then, of course, there's always competition.
The constant battle for market share.
Pfizer's got some serious rivals, so they need to keep pushing the envelope, developing new and better treatments to stay ahead.
It's a tough business, that's for sure.
It is, and we can't forget about the whole drug pricing debate.
Yeah, that's a hot button issue.
Absolutely. There's a lot of pressure to lower drug costs, and that could lead to changes in regulations or how insurance companies reimburse for medications, which could hit Pfizer's bottom line.
So a lot of uncertainty there, a lot of potential headwinds.
Definitely something to watch closely.
Okay, so to sum it all up, when we're looking at Pfizer as a potential investment, there are a lot of moving parts, a lot to consider.
For sure, they've got a long history of innovation, a strong presence in the market, a diverse portfolio of products.
But they're also facing some challenges, like those declining sales, the complex regulatory landscape, the fierce competition.
It's a balancing act, weighing those potential upsides, like the potential for undervaluation and their strong market position, against those concerns around cash flow, regulations, and competition.
Right, it's not a slam dunk either way.
It's not. It really comes down to your individual investment goals, your risk tolerance, how you assess all the pros and cons we've discussed.
Do your own research, make an informed decision.
Exactly. Don't just jump in blindly.
Okay, so as we wrap up our Pfizer deep dive, there's one more piece of the puzzle we need to look at. Their dividend policy. And, are there any share buyback programs in the works?
Yeah, dividends, those are always a hot topic for investors. Pfizer, they've got a long track record of paying them out, a real history there.
Definitely a sign of stability, right? They're sharing those profits with shareholders.
Exactly. They seem to really get that for a lot of investors. That steady income stream from dividends is a big draw.
Makes sense, especially for folks looking for more predictable returns. But we talked earlier about how Pfizer's current dividend yield is kind of low compared to the rest of the market. So how should investors think about that?
Right. The yield might not be the flashiest, but you got to look deeper. It's all about the context.
So what are we looking at? What's important here?
Well, the dividend payout ratio is key. That tells us what percentage of their earnings are actually paying out as dividends. And then we got to think about sustainability. Can they keep paying those dividends given their recent performance and what we know about their future plans?
Right, a lower yield isn't necessarily a bad thing if it means those dividends are more likely to keep flowing.
Exactly. It's more about that consistency and whether it makes sense with their overall financial strategy.
Gotcha. Okay, now about those share buybacks. Our sources didn't really mention any current programs. What's the deal with buybacks? What's the impact for investors?
So buybacks, when a company does them right, they can be a really smart way to boost shareholder value. Well, when they buy back their own shares, it reduces the number of shares out there. And that can potentially bump up earnings per share and the stock price.
Ah, so less shares means each share is worth more.
Exactly. It's definitely worth digging into whether Pfizer has done buybacks in the past and what kind of effect they had.
Right. Always good to see the historical data. Okay, before we wrap things up completely, we got to address the ESG elephant in the room.
Yeah, no deep dive these days is complete without talking about environmental, social, and governance factors. Investors are really paying attention to this stuff now.
Absolutely. It's not just about the bottom line anymore.
Right. People want to invest in companies that are doing good in the world, that are operating ethically and sustainably.
So with Pfizer, we talked about their efforts to reduce their environmental impact, like those investments in cutting greenhouse gas emissions.
Yeah, they're making some moves there.
But we also mentioned those legal and ethical concerns related to pollution. So how should investors navigate this kind of mixed bag when it comes to ESG?
It's tough, right? No company is perfect. Transparency is really important here.
So companies need to be open about what they're doing, what their policies are.
Exactly. And they got to show, not just tell. What's their actual track record? How are they measuring up to their own goals?
It's about walking the walk,
Mhm.
not just talking the talk.
Right. In the end, it's up to each investor to decide how much weight they put on ESG factors. It depends on their values and their investment philosophy.
Makes sense. Well, we've covered a ton of ground in this Pfizer deep dive. We've looked at their history, their financials, their strategy, those key factors like dividends, buybacks, and ESG. Really tried to paint a complete picture.
Hopefully, this gives everyone a solid foundation for making their own informed decisions about Pfizer.
Exactly. And remember, you can always find links to all the sources we used for this episode in the description below.
Always do your own research, dig deeper, and think about how Pfizer fits into your overall investment goals and risk tolerance.
Couldn't have said it better myself. And hey, if you enjoyed this deep dive, make sure to subscribe to our channel for more in-depth analysis of companies and industries you care about. And let us know in the comments what stocks you want us to deep dive into next. We're always looking for new ideas, so hit us up. Thanks for joining us, and we'll see you in the next deep dive.